Hello, welcome to Wholeness Life. This is another beautiful video that is going to help you in life decisions. So, as you watch the video, please remember to subscribe, like, and share with your friends and family so that we can all benefit from this wonderful video. Now, let's enjoy. Today, um, in our channel, we'll be looking at fast ways to fix your bad credit. This is by your friend Margaret Taiwo Ademola for Honest Life channel. Life happens and sometimes we make mistakes that affect our credit. The good news is that you don't have to allow your mistakes to affect lasting effects on your credit. There are many ways you can improve your credit score fast and without spending more money. You just need to know what to do and follow the easy guidelines. Number one, things you need to know is to make sure your credit report records is accurate. You should check your credit report at least twice a year or more often if you have reasons to worry. Fortunately, you can request one credit report per year from um, all three major credit reports bureaus like TransUnion, Equifax, and Experian by visiting annualcreditreport.com. So if you find any error, you could raise your score if you report them immediately. For instance, if you notice that the same credit is listed twice, removing this inaccurate information can lower the amount of debts that is listed on your credit. So, which could in turn increase your credit score. This can make a big difference since credit utilization typically make up to 20 to 30% of your score. So take the time to read your credit report carefully. Look for old debt that you've paid off and make sure that they've been removed. Information that isn't yours or fraudulent charges. If you find any error, inform each of the three credit bureaus immediately and provide any proof you have of the errors. Number two is check your credit regularly. Check your credit regularly. So many people think checking your credit score lowers it, but this isn't true. Checking your credit score is one of the best ways to stay on top of your credit health and see what factors impact your score. This is especially important if you decide to borrow money, like a new credit card or a personal loan, or you plan to buy a home. As your credit score will help you understand your score chances of approval. If you sign up for a credit monitoring tool, it will help you. You'll get free access to your credit score, reports, and monitor your credit. Knowing your score will help you make different or better credit decisions, allowing your credit score to increase as a result. Number three is pay your bills on time. Pay your bills on time. Paying your bills on time is the number one way to increase your credit score. Your payment history makes up to 30 to 35% of your total credit score. So missing monthly payment or making late payment can drop your score significantly. Conversely, a good payment history will increase your score. Though paying more than the minimum due on each month will help your credit to go up quickly. But don't worry if you don't have large amount of money to make large payments. If you cannot afford it, the minimum amount due by the due date will help your credit score as well. Lenders want to see that they can trust you by seeing an on-time payment history. So consider the bills up to pay up on auto pay to reduce the risk of late payments. You can set this up directly through your bank and eliminate the risk of making late payment. Number 4, use credit cards responsibly. Apart from any cashback or travel rewards, credit cards cannot be credit cards could be a great tool to build credit if used responsibly. As effective as a credit card could be for raising your score, it could just as easily damage your credit score as well. So the key ways a credit card can help build your score include paying at least the minimum payment by the due date every month, keeping your outstanding balance on the credit card to at least 30% or less of your available credit line. Number 5, pay down a credit card or loan. As I said earlier, keeping your credit utilization below 30% of the credit line will help increase your credit score. Credit utilization is the amount of potential credit you have versus how much of that credit line you have outstanding that you've spent. So, in other words, it measures whether you've maxed out your credit card or have ample breathing room on your credit. So, there are several different arguments regarding strategies for paying off your credit card debts. Some experts say you can pay off the one with the lowest balance first, while other experts say to target the card with the highest credit card interest rate to save the most money. Either way, just pick one and pay off your credit card debt. If you want to increase the likelihood of your credit score going up, I suggest paying down the credit card currently closest to being maxed out. This immediately lowers your credit utilization rate, and with good payment habits, your credit card issuer may automatically increase your credit line, which decreases your credit utilization rate even further. Number 6, increase your credit limit or current on current cards. Increase your credit limit on your current cards. If you've established a good payment history on your credit cards for at least 6 months, consider requesting a credit line increase. A higher credit line increase will immediately lowers your credit utilization rate and has a direct positive impact on your credit score. While it is true that a credit limit increase may result in a hard credit pull, it only lowers your score by a few points. You more than make up the difference with a lower utilization rate. Even if you don't request a credit line increase, some credit card issuers automatically provide them if you have good credit payment habits. Number 7, make payment twice a month. An excellent way to trick the algorithms, even if you spend a lot on your credit card monthly, is to make 2 months payments. 2 monthly payments. So rather than waiting until the due date to pay the total amount due once, pay half of the bill right away and the other half before the end date. Before the due date, sorry. The naturally This naturally keeps your credit utilization low and helps increase your credit score. Number 8 is consolidate your credit debt. Consolidate your credit debt. If you have multiple credit cards with higher interest rate, consider applying for a new credit card with a balance transfer promotion to consolidate your credit card debt. This helps increase your credit score in a couple of ways. First, you have more credit available on the card you transfer from, lowering your credit utilization rate. You may be able to afford a higher monthly payment with the lower interest rate, paying your balance down faster. Your you reduce the risk of missing a payment since you have fewer cards to manage. Balance transfer credit cards can be a great way to consolidate your debt and save money you'd otherwise pay on interest charges. The promotional period usually runs from 12 to 21 months. For instance, there are so many credit cards offers for a 0% intro APR on balance transfer for 18 months or more. After the intro period ends, your APR will increase to the regular interest rate of 18.24 to 28.24% variable interest rate. So make sure you have a plan to pay off all your balance that you are transferring within the introductory time frame. Number 9 is ask to be added to an authorized user with good credit. Ask to be added to an authorized user with a good credit score. So if you have a close family member or friend you trust with excellent credit, you may ask them to add you to an authorized user as an authorized user to one of their credit card account. Being an authorized user doesn't mean you have to use the card. As long as the credit card company report authorized user to the credit bureaus, you can take advantage of your loved one's good credit to increase your credit score. This works best if the account has a long history of on-time payment with a low balance. Number 10, don't cancel old accounts. Don't cancel old accounts. Not closing old accounts is one of the easiest way to increase your credit score, but many overlook this option. If you close your old credit cards, your credit history is shortened. The length of credit history shows lenders you have a long track record of using credit responsibly and paying back. That means the older the account is, the better it is to hang on to and not cancel your credit card is very important. It is okay to cut up your credit card and bond them, but do not close the account. Credit age makes up 15% of your credit score, and closing old accounts could lower your credit score. Even if you never use a line of credit, keeping it open will help mature your credit age. Important thing you need to know about your credit. Importance of credit. A good to excellent credit score is very important because if you have bad credit, obtaining a loan or credit card could be more difficult and you pay higher interest rates than someone with a good credit score. You may also have a harder time getting an apartment, buying a home, or landing a job that require good credit if you have a bad credit. Your credit score is a number that allow potential lenders to decide whether you know how to manage your money It directly represents your borrowing habits and payment history. So a lender can use your score to determine whether or not they want to do business with you or not. While this may seem a little heartless, financial institution needs to make decisions quickly, and this score makes their job much easier. This adds up to the simple fact that your credit score is important to your personal financial health. You should know how to keep your score in a healthy range so you can reap the financial benefits when you need them. Credit score calculation. Number one, credit inquiries take 10%. Account mix up, that means you have mortgage, you have car loan, you have credit card. All those mix up helps you to have like 10%. Credit A, you can see 15%. How long have you maintained a credit account? Credit utilization, how much of the line of credit you were given is used? Did you use 90%, 95%, or you even overcharge? This will affect your credit. 30%. Then payment history is 35%. That carries the highest percentage of your score. So you could receive further help and guidance on how to build and maintain a high credit score by contacting Margaret Taiwo Ademola. She has over 20 years of experience as a real estate managing broker at Elect Realty Champions LLC, a Chicago brokerage company known, known for helping buyers. She is known for helping buyers and sellers of residential and commercial properties with integrity. You can reach Margaret at 773-317-8447, and you can reach out by email by championshomes@gmail.com. I wish you all the best and make this year the best year ever, that your credit score is going to be one of the best. Have a blessed day. See you on our next video. Remember to subscribe, like, and share with your friends and family. Thank you for watching.